Welcome to another edition of Zacks Rank Buy. I am Brian Boland. I'm the aggressive growth stock strategist here at Zacks, and I've got two more stocks for your aggressive growth radar screen. And today, our theme is housing, home builders, and that sort of thing, but not really home builders. The things that happen when you get a house. So the first stock that I've got for you today is Hooker Furniture. Hooker Furniture. There it is. HOFT. Hooker Furniture. That's a Zacks ranked number one strong buy. And it's got an A for growth. That's just about all my aggressive growth videos will have. And a B for value. Let's just jump. Obviously, they make furniture. And when you're buying a home, purchasing a home, you're going to buy some furniture, most likely. And let's take a look at this chart down here. We can see right about December, all of a sudden, we're off to the races. $17 to $26. And that's a pretty impressive swing right there. With the earnings, that little green arrow there is for, it designates that there was an earnings event right there. And obviously it was a beat. There's a green arrow moving up. So that's good to see. All right, let's go through our numbers that we always run through. And we're going to find that Hooker Furniture hasn't been covered for quite a while by any Zacks analysts. So we got a bunch of NAs there. But the most recent quarter, a big time beat. They were looking for 26 cents. They delivered 65 cents. That's a 39-cent difference. Good for a 150% positive earnings surprise. Love positive earnings surprise. Okay, so now moving forward, we've got some estimates. And we can see after that beat, boy, that number went from 37 to 60 cents. This one went from 40 to 48 cents. That'll be the first quarter of next year. 82 cents to $1.45 for this year. Their fiscal year ends in January. You want to skip that 1 month. It's good for them. All right, and next year, $1.81 to $2.08. All very good indications. Let's cheat a little bit and take a look at our sales. What's been going on here? Contraction in revenue in the most recent upcoming quarter, 21%. That's not what you want to see. For $460 million. But next year, we're going to look at 12% and $515 million. So growth's coming back. Why is growth coming back? Well, interest rates are moving lower. Buyers are buying homes. At least more people are selling their homes. The listings went up for the first time in a long time today. So we got 17 times forward earnings, which is good to see. 1.2 times book. So value investors are still going to like this. And trading well below 1 times price to sales. I like to see a price to sales of 1 times. That means the market's giving the company every dollar of sales that comes in. You're getting a little bit less than that, so they don't necessarily like that. Operating margins awfully thin. So if we bring these margins up, this number will move up as well. All right, let's take a look at our chart. And I don't think the chart has got a lot of information yet because there wasn't estimates before, but all right, so here is the pandemic. We're all going to die. And no, actually, we're all going to live and things move up. And then we have the tech wreck, which shouldn't really hurt a furniture stock. But now we're kind of basing but moving. But all of a sudden, boom, we're up. We're off to the races here. You can see a gigantic difference between where those earnings estimate lines are. So back in the past to this one, that's a big move higher. Look for furniture. Hooker Furniture, HOFT. That one is now on your aggressive growth radar screen. All right, here we go. Next one, it's BECN Roofing. So this is, a play on a roof. BECN is your ticker. It's a Zacks rank number one. A for value and A for growth and A for momentum. Boy, oh boy, that's kind of an anomaly of itself that I find triple A's because, my report card, D's and F's. My mom said, "What are you doing? You have D's and F's? How come no A's?" And I said, No, this is fine. This is okay. It's okay. It's D's and F's. They stand for doing fine. Doing fine. My mother didn't buy it. All right. You shouldn't either. Let's go ahead and take a look here. We've got a recent beat at the beginning of November, and this stock has moved up higher. Obviously, again, lower interest rates are going to help capital-intensive businesses like this, like BECN Roofing. Costs a lot to put a roof on a house. All right, earnings history, a beat, a bigger beat, an even bigger beat, and cooling down, but still 4 beats in a row, and doing quite nicely. We like to see that absolute number keep on moving higher. That is also a key factor when we look at earnings history. All right, where are our estimates? They're just right above me. There we are. Let's take a look at those. This quarter going from $1.43 to $1.66. Next quarter, 68 cents to 73 cents. The full year going 681 to 750. Good move. Next year, 729 up to 804. Another good move. All right, so now we're going to go ahead and cheat again and take a look at the sales. Let's get rid of those arrows. All right, 7% for this year and then 3% for next year. This is on a big base, $9 billion in sales. So lots of homes getting roofs all the time. I know there was a big storm down here in Southwest Florida a couple of years back. Well, a little over a year now, Hurricane Ian, and they're still putting on roofs here. Lots of roofs to go. So let's go ahead and take a look at the valuation metrics. And 11 times forward earnings. Boy, that is a low PE. 3 times book, right where value investors care about it. Single-digit growth, not a huge grower, but at a good price is the idea. So what are margins doing? Well, 5.9 to 5.6 to 5.55. So margins are troughing there, but more people are going to have more money to put into a roof. But you can see that it is a constant thing. Pandemic, we're all going to die, but we always need a roof. And then we're going to go up, and we don't care about no tech wreck because we're a very important function of life. If you have a home, you want to have a roof. And now are we going to get easier capital? Are we going to find not necessarily zero interest rate policy, but rates moving from 5s down to 3s? That should help things. So that's going to push that stock higher. It is a consistent grower. So we're not going to have big numbers, big shifts on those estimate lines, but it is a good name to continue to keep on your watch list. All right, that's it for me for this week. Be sure to join us next week when we take a look at 2 more stocks for your aggressive growth radar screen. But until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.